We just had another amazing earnings report by SoFi, the one-stop shop for all things personal finance. SoFi at one point was up 19% the day after earnings, and for the past month, it's up nearly 25%. If only you would have been following this channel since the start of the year, where I have habitually been spreading the good news of SoFi, and now it looks like the big, smart money is finally catching wind of this money-making stock. Today I'll summarize exactly what SoFi reported that had investors drooling and what might be on the horizon for them. This is normally the part of the video where I tell you to hit that like button to help out a small-time YouTuber, but YouTube has some new policy where they've disabled the like button to bow down to their media overlords and have their agendas go uncontested. But we're not going to go down that rabbit hole today. Positive vibes here, guys. Just make sure you hit that like button and let's get started. SoFi actually beat on its earnings estimate, reporting just -5 cents a share when the street was expecting -14 cents a share. So a pretty big beat there. SoFi also beat on revenue. They brought in $277 million for their quarter, easily crushing the $251 million the street was expecting. And this was powered by SoFi adding the second most members ever to its portfolio in company history. Guys, in the last 3 months, they added nearly 400,000 new members, now reaching just under 3 million total customers. That's a 96% increase year over year. It's really hard to attract a new customer and convince them to use your services, but SoFi every quarter continues to do this so well. And this is just me speculating, but I have to wonder if this very successful quarter that they just had was due to the NFL season getting into full swing here. And of course, SoFi sponsors the best home stadium for 2 teams in the NFL and the US's second largest metro market. That's a lot of eyeballs focused on SoFi Stadium every single week. Of course, more members also means that more people are using their various products. Now, this includes offering student loans, car loans, credit cards, savings accounts, a place to invest and buy stocks, commission-free, cryptocurrency, home loans, and much, much more. They're up to now 4.3 million products being used, which is a 108% year-over-year growth. That is just phenomenal. You know what else grew bigger year over year? Yeah, that's right, their business as a service platform, Galileo, which might one day be the big money maker for SoFi. This Amazon Web Services type segment provides APIs, which are application programming interfaces, which is the software that allows applications to talk to each other. Galileo will get paid anytime someone swipes their card, does an ACH transfer, or API call. Galileo is now up to 89 million customer accounts that they are powering. That is an 80% year-over-year growth. This to me just shows that SoFi is powering at all cylinders. It shows me that this is a growth stock that is rapidly moving the needle on its customer base and growing all of their metrics. If the trends were going the other direction, that would be reason to panic, but that's not the case here with SoFi, which had both its lending and financial service products go up as well. They actually reached a new record in lending, driven by higher funding volume and revenue in its personal loan segment. Their CEO, Anthony Noto, has said that the company, through successful execution, has grown, broadened, and diversified their 3 business segments, resulting into yet another quarter of record revenue and a 5th consecutive quarter of positive EBITDA. A company this young, founded around 10 years ago, posting positive EBITDA is a big green flag. The fantastic growth numbers I just shared prove that, but in case you needed even more reason to feel bullish on SoFi, they actually raised their guidance for the rest of the year. They now expect to deliver a little over $1 billion in adjusted net revenue, exceeding their original 2021 full-year guidance number of around $980 million. And they also plan on having an adjusted EBITDA of around $28 to $31 million, which is slightly above their original full-year guidance number of $27 million. Oh, and by the way, they actually accomplished this all while factoring in that their student loan business got cut in half because of the federal student loans deferment by the Joey Brandon administration. Okay, I'll stop. SoFi makes money when people refinance student loans. But if people don't have to pay student loans temporarily, people aren't necessarily going to be rushing to refinance. But they expect this to resume to a normal level by Q1 22 when that student loan deferment finally expires. Now, a company wouldn't just raise their guidance unless they were confident that they could actually meet their goals. Just another great sign to see with SoFi. They just continue to check all my boxes. There's going to continue to be a lot of volatility with this stock. A lot of people don't want to see this company do well, and they're shorting it as a result. Let's address the biggest elephant in the room, and that is one that will inevitably send SoFi's stock price to the moon once it's finally announced, and that is when will SoFi's bank charter finally get approved. I'll let Anthony Noto speak to that himself.
You got to let me know about the bank charter because our viewers are kind of hanging on that answer.
I'm not sure where we lost you there. What I said was it's really a two-pronged approach. First, we have to continue to execute our business, which we've been doing. We just had record revenue. We're looking for even faster growth in the fourth quarter of 49 to 55%. Concurrent with running our business, we've been going through the exam process with the regulators. The feedback that we've gotten on that process has been very constructive, and we've done all the things from our ability to put our best foot forward with the regulators. We're encouraged about where we are. There's no definitive timeline when we continue to work with the regulators, hopefully on the last mile. There's always a degree of uncertainty in the process because of the changing dynamics in Washington in terms of the heads of different agencies, but we're encouraged about where we stand.
Now, why is the bank charter so important? It means that they can do all the legal Ponzi scheme stuff that banks are allowed to get away with, like taking deposits from customers and lending that money out as loans. That means they can make more money by increasing their lending capabilities. They won't have to worry about the cost of relying on third-party banks, which will also help with their margins. And it just allows them to be a lot more competitive in their pricing with the other big banks, and hopefully start taking away more market share. Analysts are finally showing SoFi some love. Both Jefferies and Oppenheimer Group have given SoFi buy ratings and raised their price targets, with a consensus price target of just above $25.50 among 6 analysts. That offers potentially 12% upside at this given moment. But I think this is a company that could one day reach $100, as they currently only have a market cap of around $18 billion. That's plenty of room to continue to grow. I know it's easy to get caught up with the amazing quarter SoFi just had, but keep in mind, I'm investing in a company for what it can do in the next 5, 10 plus years. I need to be confident that SoFi can be that fintech company that we all envision it to one day be, but it's not going to happen overnight. They need to continue to have great quarters like they did with this one. And hopefully that stock price will continue to go up every single step of the way. I'm going to be making videos like this all the time, so make sure you're subscribed and don't miss out on any important information. Hit that like button for whatever it's worth these days, and let me know what you thought about SoFi's earnings in the comments below, and I will buy, stash, and collect cash. See you later.